If you think your overtime checks are now tax-free, that's not what the law says. And you're not alone in thinking that. The IRS actually released clarification in January of 26 because there was so much confusion around this rule. The biggest misunderstanding I see, people think all of their overtime pay is tax-free, and I'm getting this question a lot. That's not what the law says. I understand why people got excited. The headlines make this sound like a major tax break, and it is. But in this video, I'm going to walk you through what no tax on overtime really means, what part of your overtime actually qualifies, who can claim it, the income limits, and how to claim it correctly on your tax return. Everything I'm explaining here comes directly from IRS guidance, not social media clips or headlines. First, let's clear up the biggest misconception. This is not tax-free overtime pay. The IRS calls this a deduction for qualified overtime compensation. That means it's something you can claim on your tax return, not something that magically stops being taxed on your paycheck. Your employer still withholds taxes like normal during the year. Nothing changes automatically on your paycheck. The benefit comes later when you file your tax return, and only if you qualify. So if you're expecting your overtime checks to suddenly be bigger during the year, that's not how this works. Okay, this is probably the most important part of this entire video. So according to the IRS, qualified compensation is overtime compensation required under the Fair Labor Standards Act that exceeds the employee's regular rate of pay. Now that sentence is doing a lot of work, but here's what it means in plain English. Only the overtime premium qualifies, not the entire overtime paycheck. Now, let me give you a simple example, and this one really helps people. If you normally make $20 an hour and your overtime rate is $30 an hour, most people assume all 30 is overtime. But the IRS says your regular pay is still 20. The extra 10 is the overtime premium. So that means only the extra 10 qualifies for the deduction, not the full 30. So if you work 10 overtime hours, you do not get to deduct 300. You may be able to deduct 100, assuming you meet the other requirements. This one point alone clears up about, 80% of the confusion I'm seeing here. Now, I said the last part was the most important part, but this is a pretty big deal too. Not all overtime qualifies. The IRS ties this deduction specifically to overtime required under the Fair Labor Standard Act or the FLSA. That means you must be covered by the FLSA. You must be overtime eligible. You must not be exempt from overtime rules. So practically speaking, what does this really mean? It means you have to be an hourly, non-exempt worker. This does not automatically apply just because your employer chooses to pay extra hours or bonuses. It's tied to federal overtime requirements, not company policy alone. For example, me as an accountant, generally I'm not going to be covered by this, and therefore even if I got overtime, I still don't get the deduction. Now, if your overtime comes solely from a special arrangement, state-only rules, or something outside of federal overtime requirements, you should not assume it qualifies. Now, another big surprise for people is there are income limits. The deduction is capped and it phases out at higher income levels. So here's the framework. The maximum deduction on this is $12,500 for single filers or $25,000 for married filing joint. So this can be a big deduction. I've had some people say $5,000 on this alone, so it can be very powerful. But the phase out begins at $155,000 of modified adjusted gross income for single filers and $300,000 for married filing jointly. So if you're a high income worker, this deduction may be reduced or eliminated entirely. This is not an unlimited benefit. And like a lot of the other things we've been talking about this year, your modified adjusted gross income is very, very important. So you're going to want to really learn what that is. And we've talked about that in other videos. Now, it's important you understand this. Even if you qualify for the deduction, some taxes still apply. This affects federal income tax. It does not eliminate Social Security tax, Medicare tax, or potentially state income taxes. Those are separate systems. It's going to depend on where you live. Now, when it comes to Social Security and Medicare, you're probably not going to have to worry about that because your employer is going to take it out automatically, but it is still subject to that tax. So I don't want you to be surprised when your check is not as big as you thought it was going to be. So if someone tells you overtime is totally tax-free now, that's simply not accurate and they're uninformed. Be careful of who you listen to. Now, here's what matters at filing time. The IRS has acknowledged that, especially for 2025, many workers won't see a clean qualified overtime number on their W-2. You may need to rely on pay stubs or your employer information to calculate the qualifying premium portion. And this is why so many people are confused when they look at their W-2 and they don't see anything obvious. And we've seen a lot of this. There's only been a few with it on it. That doesn't mean you don't qualify. It means you may need proper calculation, and that calculation it has to be accurate. Because if someone deducts the full overtime amount instead of just the premium portion, that's exactly the kind of mismatch IRS systems are going to be looking to flag automatically. But it's really not that hard if you understand it's just the premium. All you have to do is figure out that premium portion. So, for instance, if you made $20 and $10 was your premium, like we talked about earlier, how many overtime hours did you have for the year? Multiply it times the 10, and that's going to be your number. For the most part, it's pretty much that simple. And then you're going to go to Schedule 1A. I've gotten this question a lot. Well, how do I do it? Well, you're going to go to Schedule 1A. How do you do it in your software? I don't know. We use UltraTax, which is a fairly high-end software. I don't know how to do it in some of the simpler programs like TurboTax. I can't answer that, but you're looking for Schedule 1A, and that's where it's going to go. So here's the bottom line. No tax on overtime. It is real, but it's much narrower than the headlines made it sound. Only the premium portion qualifies. Federal overtime rules matter, and they matter a lot. Income limits apply, and it's claimed on your return, not your paycheck, and it may not be on your W-2. If you worked overtime and want to make sure you're claiming this correctly or avoid a mistake that could trigger IRS questions, subscribe here. We're breaking down these tax changes as the IRS releases guidance. Not rumors, not headlines. We actually talk about the actual rules.